Yo, YouTube family, I hope everybody had a wonderful week this week. Unfortunately, this week I do not have a weekly update for you. I feel like my weekly updates have been becoming more and more dry, and I'm going to skip from doing every week to probably do like every single 2 weeks, just so I can keep the content more vibrant and more upbeat and not just the same mundane thing every single week. So that being said, this week I'm going to be going over a checklist or key preparation guidelines for those viewers who are W-2 employees. And then the video following this one, I'm going to talk more so about the preparation guidelines for people who are like myself, small business owners. That being said, quick disclaimer, this video is purely for entertainment reasons. I am not a licensed CPA and I'm not a tax professional. So for any professional advice that you need, please consult with a CPA or a licensed tax professional. So before we get into the checklist, I'm going to go over a few Tax 101 items, just some basic things that you need to understand just so you can get a better idea of how the tax system is working for you. All right, let's get into it. The first thing we're going to talk about is the tax bracket. Now, I've included a snapshot of the 2020 and the 2019 tax brackets that I got from nerdwallet.com up here in the right-hand side of the video. And we're going to cover the 2019 tax bracket for this video. Now, the way how the tax bracket works is no matter how much money you earn for the year, the first $9,700 of your income is taxed at 10%. So, for example, let's say you earned $100,000 for the year. And what we mean is gross income, how much your W-2 will report that you grossed for the year. So, if you grossed $100,000 for the year, so we're going to say $100,000 up here. All right? The first $9,700 of this $100,000 is taxed at 10%. So $0 to $9,700 is taxed at 10%. Now, when you go from $9,701 to $39,475, that is your next $29,775. This amount is going to be taxed at a 12% rate. So your entire income so far, the $39,475, is not taxed at 12%. The only amount that's taxed at 12% is the next $29,775. Next, we go to what's taxed at 22%. Now, what's going to be taxed at 22% is the difference between $39,475 and $84,200. That means that your next $44,725, let me put my dollar signs right here so you guys can see it. Your next $44,725 is going to be taxed at 22%. Now, if you remember, our starting income was a person earning $100,000. So we still haven't yet got to $100,000. We're only at $84,200 now. That means that any amount for this person that we're talking about in our example, any amount over $84,200 is going to be taxed at the next bracket of 24%. For this person, that's going to be what, 15,800. Yeah, the next 15,800 for our example person here is going to be taxed at 24%. So I think you guys get the gist of it now. Every time you move up, you basically subtract the previous high balance for the previous tax bracket from the high balance for the next tax bracket, and that tells you how much is going to be taxed for the next tax bracket. Now that we understand how the tax bracket works, let's talk about how we can reduce our tax bracket or reduce the amount that we owe after we have filled out our tax returns. So those two ways are your tax credits and your tax deduction. Now, a tax credit basically reduces the amount you owe to the IRS after you have filed your tax returns. So tax credits such as the Earned Income Tax Credit or Childcare Tax Credit or the Lifetime Learning Tax Credit and a lot more out there will reduce the overall amount that you owe the IRS dollar for dollar. What that means is if you got Childcare Tax Credit for $1,000 and you owed the IRS $1,500. That means that that $1,000 would be taken away from that $1,500, and now you only owe the IRS $500. Or let's say you got a return of $200 and your earned income tax credit was $500. That means that you would add that $500 to your $200 tax return, whereby giving you a total of $700 on your tax return. Now, tax deductions are completely different. The way how tax deductions work is they directly affect your tax bracket. That means that if your overall gross income for the year was $100,000 and you contributed $10,000 to your 401k, your taxable income now drops from $100,000 to $90,000. So the more things you do throughout the year to reduce your taxable income is in your benefit. So that's the difference between a tax credit and a tax deduction. So now we're going to jump into some of the checklist items that you need for your 2019 tax return. So if you like what I spoke about so far about tax credit, tax deductions, and your tax bracket, please hit the like button. And just to let you know, in the next coming weeks, I'm going to be releasing a video about how to reduce your overall taxable income. So if you want to see that video when it drops, just hit the subscribe button and ring the bell so that you guys can be updated as soon as I drop that video. Let's jump into the checklist now. The first thing on the checklist, and I cannot stress this enough, please get an accountant. Don't try to do it on your own. I've been trying to do my taxes on my own or have friends do my taxes for me since college. And I'll say one of the biggest mistakes that I made was having a friend of mine do my taxes when I was working as a 1099 contractor in my sophomore year. I got an internship for $20 an hour, knew nothing about contractor or 1099 work, and I gave her my taxes. She was working at one of those big tax return places, gave her my taxes, and she filed them. The problem was she didn't ask me about the 1099, things that accountants would ask you. Hey, did you work in your home? Did you have to use your vehicle to travel here? Let's reduce your taxes by this amount. How much were you paying for rent in college? Stuff like that really cost me a lot in college and I didn't know. So please go get an accountant. And if you're going to get one this year, remember to bring your 2018 tax return documents also. And finally, I have to say this, but the IRS does have a free online filing tool. If you earn less than $69,000 gross income in 2019, the IRS will allow you to file your federal taxes for free. And there are also 20 states out there that have followed suit with the IRS and allowed their local citizens to file their taxes for free. I'll give you a list of those states in the comments below. So if you feel like your income and your taxable status is really simple and you don't need to go to an accountant, then go ahead and use the IRS free tool. Now, I will say this, consider this before you decide to do a free tool. If you're earning $20 an hour and it takes you 8 hours to fill out your tax return, that is $160 that you just lost trying to fill out your own tax return. And if you're a single individual with a simple tax return, I guarantee you a professional out there is not going to charge you more than like $100 to $150. So again, please go get an accountant. Next is your W-2s. I don't think I need to go too deep into that. Self-explanatory, get your W-2 from your employers and move on. So the next one after W-2s now are charity donations. Any donations to Goodwill, your Salvation Army, if you donated your car, get all of those documents, bring them in. And also, please stop dropping your money into the offering plate and saying, oh, I don't need to claim this on my tax return because I'm giving it to God. People, the church is a non-taxable charity organization. Any money you give to the church is tax deductible. So, if you're giving money to the church, please write a check, drop it in the offering box, and claim your money on your tax return. Or go to the office, the church's office, and hand them your money and ask them, can I please get a receipt for my charitable donation? Whatever you do, me personally, I prefer a church that allows you to give offering online. At the end of the year, I get my tax statement from the church, itemizing how much money I gave each month, so I know exactly how much money I gave. Next is childcare payments. The key thing to know here is that from 2017 to 2019, the threshold for income that can claim childcare has dramatically increased. Thank you, God. So the Tax Cut and Jobs Act increased the gross income limit from $75,000 for single individuals and $100,000 for married individuals in 2017 to a whopping $200,000 for single individuals and $400,000 for married couples in 2019. People, when I was doing my tax on one of those nice tax softwares in 2017 and I got the message, you do not qualify for childcare deductions, I was distraught. This year though, I'm glad for that because now I can claim all that money. So some of the things that you want to claim for childcare this year, you're going to claim your daycare, any before or after school care. You're also going to claim your summer camps. So go ahead, gather all those receipts, all those payments, and get them ready. And I want to also highlight that the tax credit for the childcare has increased from $1,000 to $2,000. And in 2019, you can now claim anybody above that 17-year-old threshold, and even your relatives that you're taking care of, that jobless relative that has been living with you. As long as they meet the IRS guidelines, you can get a tax credit of $500 for them. Everything I just said to you can be found on the IRS website, so please go ahead and double check. The next thing you need to get your documents for are your student loan interests. That is the 1098E. Make sure you have that to send in to your accountant. You also want to have your investments and dividends documents. That's the 1099 INT. And for those of you who had to move from one side of the country to the other side of the country for your job, sorry to tell you, but the new tax laws do not allow you to claim those moving expenses. Now we have our teachers. Please, I hope all you teachers kept your receipts. I think every teacher by now should know that even if you buy, a simple pencil for your classroom, that's tax deductible. So make sure you bring those receipts into your accountant. Next is a new home purchase. Now there are a lot of tax credits that come with a new home purchase. So if you did things such as putting on solar panels or getting energy efficient windows or energy efficient washer, dryer, heater, whatever it might be, make sure you keep a document of that to bring into your accountant. And also when you're going into your accountant, make sure you have your closing cost details. He's going to need that. And then you're also going to need your mortgage statement or your 1098 mortgage interest statement. Next are medical bills. Now, medical bills can work for some people and not for others. So give it to your accountant. They will be able to determine whether or not you can claim those medical bills. Next are your 401k. If you have just been giving towards your 401k, you don't have much to worry about. However, if you cashed out some of your 401k or you left an employer and moved to another one, and instead of moving your 401k into another 401k plan, you cashed out also, then you're gonna have some penalties. So you definitely want to make sure you have your 1099-R and your Form 5498 IRA contributions so that you can hand those over to the accountant. Finally, the benefits of gathering all your documents ahead of time is that you can just take them down to your accountant's office and they will contact you when your tax returns are ready. You don't have to have two meetings, one to cover what you need to bring in and the other one to go over your return. You just need to have one meeting. So, you got your tax return now. What do you do with it? Personally, I think you should think before you purchase anything that doesn't bring you income. There's only one scenario I would say to just go ahead and do it if it doesn't bring you income, and that's to take family trips. I believe that everybody should take family trips and make memories. So if you get some money, go ahead, take a family trip with your kids, with family members, brothers, sisters, and make memories. Next, if you're on the debt-free journey with me, maybe think about putting that money towards paying down your debt. That's a benefit right there. Finally, if you don't know what to do with the money for right now, take it, put it in a high yield savings account and wait until you figure out what you want to do with it. Maybe it takes you about a month or so to figure out what you want to do with all that money. But during that time, you're still earning some kind of interest on the money, and then decide how you want to spend it. But don't just let the money sit there and not earn income on it. All right, guys. Thanks again for sticking around and watching the video. I hope I gave you guys some precious information for this 2019 tax season. If you liked the video, hit the like button, subscribe. Also, remember, hit the bell if you want to watch out for my video that's going to come about how to reduce your taxable income and how to get tax credits. So, thanks again for joining.